Yo, what is good, guys? I hope you all had a fantastic weekend. Here with the late night video. As we all know, the markets are very, very close to crashing. So right off the bat, I'm just gonna say, I really recommend watching the whole video through because I got a lot to tell you. I'm gonna show you where we're gonna be going, the levels to watch, everything you need to know. So with all that being said, we're just gonna get right into it. Make sure to show the video some love, give it a like and subscribe, and let's get into it. So to start off. This week is loaded with catalyst. You have a lot of Fed members speaking, PCE numbers on Friday, GDP number updates, I believe on Wednesday. We'll take a look at the schedule later, but um, we're just gonna. I really want to get onto SPY so you can really see the whole picture. I'm gonna explain to you what can happen, what will happen, because there's a lot of tricky things happening right now. So. You'll see what I'm talking about. Stick to the whole video. I promise you, it is very valuable information. So, to start off, Bitcoin. Again, I'm not sure what it's trying to do here. It's in a wedge, but lately, as you'll see on the U.S. dollar and SPY, we had massive wedges get completely denied, and just defied and continued in the direction it was highly likely to reverse from. So. You'll see that on the US dollar and SPY, but for Bitcoin, you're in a wedge here. Wedges have an extraordinary consistency, the consistency in playing out the way wedges do and to their targets. So, Bitcoin's been moving pretty slowly actually. As you can see here, it got rejected from this line right here. So there's really not too much to say. We're just waiting for this thing. Let's see if it has divergences. It should. Yeah, you have divergences. So, you have those on the dollar and SPY. I guess you're just gonna want to be watching this trend line. Will it break? Will it not? If it holds, we'll see if we get that retest of the low 20,000s, and ultimately that break. But that would result in probably the equity markets following with it because Bitcoin and the equity markets do move in tandem pretty well. So there has been a disconnect lately, which I've been noticing. So we'll have to see how it goes. It's kind of hard to read and correlate Bitcoin with the U.S. markets because, if there's not that tight correlation, then you can't really use Bitcoin to the advantage we used to be able to. So. On to oil. Everything's failing really consistent patterns here. Oil failing a channel here, you could see it bounce back in. I'd give it 2 days to see if it does that. If not, I really don't know what oil is going to want to do. It's hard to say. There's a lot of congestion here, so I would expect actually some pretty well holding up in this region just because there is a lot of congestion, but we'll see how it reacts with this bottom line. Demand destruction, it's killing oil right now, so it's trumping over everything else, all those other fundamental factors. But again, we're just gonna have to see how it plays out. I would assume divergences. MACD does have divergence. RSI does not, so that's very interesting. Oil, best to just wait it out, I guess. Not too much else to say. Give it 2 days, I would say, to see what it really wants to do with that bottom trend line. US dollar. This thing exploded overnight. Second futures opened. I'm going to zoom in a little. This thing has completely broken out of this wedge to the upside, as well as even breaking another big resistance and absolutely just demolishing it and just flying. And the British pound actually was crashing. I'm going to bring that up so you can see what I'm talking about. GPD USD. So British pound and the US dollar has been getting destroyed lately. Very interesting. You got a nice recovery. Really fast recovery. What is that, 1.5%? That's big movement here. But as you can see, this is not normal. The FX markets are absolutely going haywire right now. So, not too much to say about this. DXY is the big thing I'm watching. I don't really trade currencies, but they really do give you a kind of a broader view of what you can use to your advantage when trading pretty much anything. So uh, I'm not sure what this thing wants to do. Maybe this can all the way back down into the wedge and break down to the bottom. But if you go back to, I forget which video it is, but the U.S. dollar, I think, was testing this trend line right here, and I said, I believe I said 112 or 113. That's where we are now. So it's blowing through my targets right now, but yeah, we'll see what it continues to do in the following, I'd say week. I think a week you could see some pretty big pivotal movements, like if we want to continue. This isn't sustainable, but yeah, I'm not sure how long you can do this for. You still have those gigantic divergences here, which actually I'm just seeing. Oh, now breaking out of those resistances. Let's see what the weekly's looking like. Yeah, that's pretty interesting. So we're just gonna have to see what it continues to do if we want to continue this momentum. Extraordinary momentum, but yeah, we'll just have to wait and see. Apple, not too much to say. Apple kind of in a falling wedge, but as I just showed you, DXY defied that wedge, SPY defied a wedge. So Apple, it's in a wedge, but we'll see how it reacts. It's been holding well right here. You got a lot of pretty significant points around this region at 150. That's also a big psychological number, 150. So it's been holding well here. We'll see how long it can do that for. MACD couldn't cross over, but I'd give it a few days to see if it can or if it wants to. Tesla, kind of the same thing, not the same chart, but at a similar kind of like situation, I guess, where this was kind of a really awkward trend line to find. I guess actually just looking now, you kind of have a trend line right here, roughly. So something like that, maybe big flag actually. I'm not sure. It's hard to say. Tesla's really it's really messy right now. You had like this resistance get broken and then you came right back into it. I guess to fill this gap, but Tesla really, really awkward, kind of hard to read, but I don't know. I'm not sure what I want to do. I think any break of like one of these trend lines here, this top or this bottom region, especially this line, will result in a lot more momentum. And this is not something I've actually looked at in a while. We'll see how this has been doing. Bollinger Band kind of broke out, so actually, yeah, it's still in a range. I'm not sure what I want to do because it's still range bound. So whichever way I want to break, it's going to go very hard and very fast in that direction, whichever way I want to go. Biotech, nothing's changed. It's been following that Elliott wave. We traded it up. Yeah, we've been making good money off of this. We have not traded this, but I want to show you something so you can really understand these red lines here. These are virgin points of control where liquidity needs to be tested, and specifically this trend line right here. It might be hard to see with the fibs. That fib right here, that got hit, so that's really all you need to know about the fibs. But I'm going to replay this so you can kind of see how it goes to these points here. So let it load. Right here, virgin point of control, that red line. I'm going to play it out so you can see it happen in real time. Yeah, it's going really slow now. Okay, I'm just going to skip it because it's not cooperating. Actually, it's probably going to lag out on me. But anyways, that red line got hit. I had to deal with that before, so I'm not going to waste my time on that. But moving on to SOXS, this thing has gone insane. Absolutely parabolic, as you can see. There's no demand up here. You're not really going to find any buyers up here. The main, I guess, if you're thinking like a bell curve, this is the middle region. You get out to those higher standard deviations. There's no volume up here. So that's what I'm trying to say here. There's no volume up here, so it would be likely to see a reversal. You also had a really big trend line here, so I would expect a rejection around here. But if SPY, if the markets plummet through that previous low, all these inverse ETFs they're just gonna go to the moon. So not too much to say about this. It's this is pretty much the last supply zone actually, where you can see that kind of spike in volume. Above that, there's just nothing. So it would make sense for it to come back down to this region at least. But if the markets break those lows, there's not really any telling where this thing can go. So SOXL, kind of the same picture, but in reverse. You had a very big supply or demand zone here, and it stretches down pretty low. So we'll just have to see how this goes. It's hard to say. Everything's really going to tie into what the general equity markets want to do. So that's what I want to get to. The VIX, big region here, big area. A couple weeks back, I was like, this is where you're going to want to be looking for those VIX call options. I even said it's probably going to bottom during the third week of August, just because of seasonality, volatility, and some cyclical patterns I was looking at. You can go back and look at the thumbnails where I said, I believe it was in one of my thumbnails where I was talking about September 16th, and that had a lot to do with the VIX bottoming in the third week of August. So closed under 30, it spiked above, but eventually closed underneath it. So very interesting. We're going to see how Monday goes. I think Monday's going to be an important day, but you'll see what my expectations are for Monday very soon. So DOV, this is real estate. If you're in the Discord, this is something big we've been talking about. Seriously, this is a real estate market inverse. So like when the general real estate market is going down, you'll see this thing go up. I'm just going to keep it simple as that. There's a lot of other factors that go into it, like specific holdings in this ETF, but for the sake of this video, keeping it short as I can, you tie it with the technicals and the fundamentals. Cracks are starting to show up in the housing market. You had like mortgage rates skyrocketing. I think that's what it was when I was talking about this. But look where you are now, in the 60s. So from that breakout, wherever that was, it's been running pretty hard, 60%. So DOV, a lot of people, it was more of a long-term play. You just put your money in it and kind of forget about it. You could see a nasty double top here. But DOV, it's been running. This is something I've been looking at and watching for quite a while. So on to SPY. So I got a lot of stuff to talk about. I want to keep it short, but I want to give you everything you need to know. So first off, I want to point out, if you have not seen this, we had the highest volume traded in puts in history in a single trading session. That is insane. Like, there's never been a day before this where more puts were purchased or traded. So that's something crazy to note. I'm going to show you the put to call ratio on Friday. Actually, I kind of want to show you that now just so I don't forget about it. As well as it's kind of important because I've brought this up many times where, let me just put it up so I can just show you it as I'm talking. So put to call ratio. This is something I like to kind of use as a contrarian perspective. I don't mind going against the herd, but sometimes it gets to a point where that rubber band just snaps, and that's what we're going to be talking about. So, anyway, scale. Okay, put to call ratio. It has never really been this high. There was that COVID drop. Times in like absolute maximum fear. But my point is here, every time it got this high, you got this kind of reversal. It marked these bottoms. You get your huge spikes. It marks a bottom. So it absolutely went parabolic on Friday because you were approaching these lows. Everyone's, mostly retail, buying into that fear. They're like, oh, we're about to crash, even though we already crashed. As well as market makers hedging, big institutions hedging. So there's a lot of reasons for this. The previous times it's been few, but this time is definitely different because it's a much different scenario. It's pretty scary. So this is the time where I'm not as confident in going against the herd. I've been very confident in doing that in the past, but this time, you really need to be careful with what you're doing here. So that's it for that put to call ratio I wanted to talk about. It's very high right now, which has marked bottoms in the past, but the rubber band might snap this time. So Um, we're gonna take that off and let's see. So the failed wedge. This is another big thing. This was something I had in that thumbnail I was talking about. You know, you had to break a really important level of um, 389. So that did not get broken, and that caused a major drop. And that's something we were talking about in the Discord. I'm gonna make my picture smaller. Um, if that broke, then you would get a waterfall right down to 360. I said that in the Discord. Didn't quite get to 360. I wasn't even aiming that. Once we got near there, you'll see my explanations. But yeah, right now it's really on edge. It's really scary here. So I'm gonna explain why this drop happened, kind of what triggered it, how we expected it, so you can kind of take your notes and know what to do in the next time you're kind of in this similar situation. So, why did this happen, or what needed to happen for this not to happen, was that 389 area. This is an area we've been watching in the Discord, and about the Discord. Honestly, this is probably the best time to join it, most crucial time too, because the market is about to crash. Like, it's about to crash. Biggest drop you're gonna see in quite a while. So, what we did the day before FOMC, we bought calls. We waited all day. We got them right before close. We held them into FOMC, and we sold them a little early, or at least I did. Some people held on longer, but I think I sold them at around like 383. And then we got calls at the absolute bottom. It was probably on this candle here or here. We rode them all the way up. Now what I wanted was the break of 389, because if you got that break, we could have gone all the way up to 420 to fill this gap, because that ultimately would have given us a wedge breakout. In terms of Elliott wave, that would have given us, I forget what wave it was, but it would have given us a lot more upside, and that did not happen. So what did happen is you got your next move to 373, which was my first target, and then just once you broke that, you're going way lower. And under 373 was a volume air pocket. So this is where it was like, okay, this thing's gonna drop even more. As you can see right here, there's no volume traded in this region. So what did it do? It went to the next demand zone. And you know, I really recommend learning how to use these volume profiles. Just learning. There's a lot more to trading than just, you know, supports and resistances. There's a whole picture behind it. With it's a really big auction where the big money, smart money, is just trading all these shares back and forth. And when sellers overpower the buyers, or the buyers overpower the sellers, you get that push in that direction into your next demand zone to supply zone. So it's how the market works. So this is probably something you do want to understand if you really do want to pursue trading in the markets, wherever you do go with that. So that's what happened. You broke 363. The next demand zone was 368, and it had to do a lot with the fibs, which we're going to move on to. I think we can do that now. I think I have one more thing to show you first, but yeah, so the big demand zone, once you break this, it's a straight drop to 340. There's simple as that. You break this previous low, which I think you would have to gap down underneath it. I don't think you could break it during the day. So I think we're going to get a little bounce here. I do think we're going to bounce. I'm going to show you the levels, but what's happening here is you can't just fall straight this hard down into the last support and then continue completely just free falling. So you do need a little relief. Like, even this might count as a little relief, which you'll see why this could actually be all we need. So right underneath this demand zone, there's no demand all the way down until 340. And personally, my targets, as I've been saying in my videos for the past few months, I think, past few weeks, especially from the Discord, you know, I've been looking for 333 to 290. So, yes, call me crazy, call me whatever you want, but that's just how it works. That's what I see on the charts. So, it would be insane, but it's on the table. So I think we can move on to the Elliott wave now. So yeah, that's what we can do. So falling pocket on the 373. What happened on Friday? So this really sets up the picture for where we can get a reversal from. The 9 count. Let's go on to the daily. So this was something I found on Thursday. 9 count. 9 count gives you these very strong reversals. It doesn't guarantee you a reversal, but it really does give you kind of a how do I say this? Like, it usually signals a potential reversal coming. That's what I'm trying to say. So 9 count, you got a big reverse. 9 count, close to the top, you get a gravestone doji, and then you got your drop. I think the gravestone doji was on the weekly. Yeah, gravestone doji on the weekly, and it got annihilated. So these 9 counts really mark these tops and bottoms. You're very close to them. So that's what we got on Friday, and we'll see how this continues to play out. So that was just something to note. Taken with a grain of salt, but it is something very relevant. Something very relevant you want to kind of have in your arsenal of knowledge. So now kind of on the daily RSI. This is another big thing. We're oversold here. And you don't come down here very often. You rarely come down here. And that's where we are right now. So it's marked reversals quite a few times, but this time is very different. You can stay in oversold, overbought for quite a while. Like for example back here, you just kept going. But the point I'm saying here is when you get oversold on the daily, you usually get reversals. But when you at a point where there's just extreme fear, which extreme fear usually does tend to mark a bottom, except in cases where I guess what am I trying to say here? I'm lost for words. I guess in like I don't know what I'm trying to say. Anyways, we're just gonna go on because I can't remember what I'm saying. Weekly MACD crossed over. This is another really bad thing because we traded this cross down. I don't think I had my YouTube up yet, but we traded that cross down and I was like, it's game over. That's really when it started. And you got a huge relief bounce. That was when the MACD crossed back up, and now it's crossing back down. So this is very bad here. Histogram's also going red. That's just going to be something we're going to be watching. Let's see what the ADX is. Oh my god. So, okay, that's really bad. So, this is showing you that the weekly bearish strength is going to be consistent. So, odds are extraordinarily high we continue to the downside. But we're just going to go on to our Elliott wave. Actually, first I'm going to show you that fractal. This was a fractal I marked out quite a while ago. It's still playing out where you break that bottom line, you retest it, and you continue to fall through. I guess into this line, but that's not exactly really like the point of this fractal. The point is you break underneath that, you bounce, test it, and you free fall. So the fractal, 100% identical pretty much. I showed you all the fractals inside of it, and that's what happened here. So we're going to do our Elliott wave theory now. This is really kind of the big thing for this video. Hopefully you're still watching this. But what do we do on Friday in the Discord? Again, join it. Probably is the most important time to do that, just so you know what is really happening. So you hit that third target here with the fibs, and that's where I went long actually. For a little bounce, I went long like right here. I think I hope to this drop because I'm taking the risk here. It is definitely dangerous considering how close we are to just that rubber band snapping, but what we are doing right now is we are retracing. We are likely in wave 4 to the downside. So I'm gonna draw it out so it makes sense, and I'm just not like saying words here. So what needs to happen is you retrace. You have wave developments, and you can't just have straight lines. Like you can't just go straight in one direction forever. So what happens within those waves? You get retraces, and each wave count. There's wave 1, 2, 3, 4, 5. Each wave has requirements of how much they can retrace. So right now we're in wave 4. I'm gonna draw that bigger wave count, so you can visualize what I'm saying here. Wave 2, 3, 4. We might be having this fifth wave down, but in the smaller picture, that actually might confuse you a little bit, so I'm not going to draw that one yet. What I want to have out is this one. So wave 1, 2, 3, 4. So these gray rectangles, this is where you can retrace to, and then you get your next wave down, which you measure out with your fibs like this. So it's really not that hard. It's just it's a lot of repetition of just understanding what it looks like, and understanding all of the rules and requirements for these waves. But I think it's likely we could retrace to the 3.382 because it would look symmetrical with wave 2. But there's a lot of smaller factors that go into this, but the max, okay, this is the most important thing here. The max wave 4 can go to while staying bearish is the 50% of wave 3. This is wave 3. Wave 4 cannot go more than 50% of this wave. So right here is 50%, around 3798. If you break that, it kind of switches things up a little. You could move all the way back up to test 390 here, 3900 on ES, which would be like that 389 area on SPY, which I wanted to have broken last time, but that did not happen. So if you break this, it opens the picture for an ABC, which is very unlikely, but I guess you gotta keep it on the table. It's unlikely because you need 5 waves down here, but I could not find 5 waves down. It looks very awkward having that count, so I don't think an ABC is possible. But if it is an ABC, we can go back over 400. We can go back to over 420 and fill those gaps. You have gaps all over the place. I'm going to show you those right after this. But what I'm saying here is, if you break this area, you can go higher. If you don't, you get rejected off of it. You're going to want to be looking for 3450 on ES, which is would line up perfectly with that volume pocket on SPY down to 340 and under. Probably, yeah, it looks like this is a solid region where we would definitely find a bottom. Maybe not a bottom forever, but you would get an enormous bounce from this region, as this is definitely an area you would find buyers in. So it's going to be a very big next few weeks, especially this week. You could get that retrace and that drop all in this week. So if anything really major happens, I will do another video this week. But I do believe I laid out everything you need to know. Gaps here, I'm going to show you these quick, just to show you the incentive for the upside. You broke out of that wedge, which is really makes the chart look really unattractive, but there's this thing which you also broke, so it's breaking every support there is. The only hope bulls have a short squeeze, which with this high amount of short interest there is across like QQQ, the NASDAQ, SPY, you could see an enormous squeeze, but I don't know, the rubber band really could snap this time. So this video was longer than I wanted it to be, but I did have to say everything I had to say because we're at a very important spot. We could be about to witness probably one of the biggest drops in history. So as if we already haven't, which this is already in the books, but it could get much worse. So the big things I want you guys to take away from this are these levels. Take a screenshot and write these levels down. The ones with the gray rectangles here. If you break the 50%, it opens the door to testing that 390 area on SPY, and if you break that, 400, 420 plus. But if you don't, next up is 350 sub 350 on SPY, 340, that volume gap. So that is what is more likely, and almost guaranteed probably. But if that does not happen, you gotta be ready for the other scenarios. So this week, massive catalyst, Fed speakers, GDP numbers, updates, then PCE numbers on Friday. So Friday would probably be the most likely day to get that drop, but we'll see how it goes. That's where I'm gonna leave this video. I really hope you watch the whole thing through. It's a longer video, but a lot of important and crucial information you do need to know. So with all that being said, if you watch the whole thing through, show it some love, give it a like and subscribe, and peace out, guys.